Continuing on with our definition of accounting. Accounting is a process that we use to keep track of business transactions. And remember also that a transaction is basically an exchange between generally two parties. There could be more than two parties involved in a transaction. The steps that we go through in this process of keeping track of business transactions are first to analyze a transaction. We need to determine what type of exchange or what type of transaction we're working with. Some simple examples would be a sale, or it could be a check payment or payment for services or merchandise. Could be payroll, could be a number of different types of transactions. The second step would be to classify that transaction. And classification is probably the single most important aspect of bookkeeping and accounting. And probably for the average student, the most challenging, the most difficult part of accounting to learn. It takes a lot of work, it takes a lot of practice, and it's a trial and error process. But you know, the more you work at it, the easier it becomes as time moves on. So when we classify, basically we categorize. We are categorizing a transaction into the proper account categories. So this is where the accounts come into the equation. After we have analyzed and classified a transaction, then we pretty much know what that transaction is, and we have all the parts that we need to go on to the next step, which is to record that transaction. Recording is a process, if we go back to the traditional ways of recording, it's basically a process of using a journal and a ledger. Nowadays, a journal and a ledger have basically been automated, and most accounting and bookkeeping functions are done by a computer. But the basic concept of journalizing and then posting to a ledger is the same. It's just that we've moved from the old traditional pencil and paper style of doing it to something that's done on a computer. The fourth step, which is really closely tied to the recording step, is to summarize our transactions. And summarization is a multi-step process in itself. Along the way, we summarize as we go. The first summarization would be in the form of what we call a trial balance. Trial balance would be probably the simplest form of summarization. And ultimately, our summarization results in our formal financial statements that we are preparing as a result of our accounting process. Once we have our financial statements completed, then generally the last step involved in the process would be further analysis and interpretation of the results of our work, analysis of the data, and interpretation of financial ratios and that sort of thing. So we again analyze, this time the finished product, and interpret what are our financial statements telling us. So to summarize, accounting, simple definition, is a process that we use organizationally primarily to keep track of business transactions. A transaction is an exchange, generally between two parties, and that exchange would usually involve goods or services going in one direction, and coming in the other direction would generally be some form of financial remuneration, or to put it simply, money. And then the series of steps that we use as part of this process of keeping track of business transactions involve analyzing a transaction, figuring out what type of transaction it is. Is it a sale? Is it a purchase? Is it a payment? Is it a receipt, cash receipt, a receipt of funds? Is it payroll, and so forth. The next step would be to classify that transaction. And when we classify, we basically categorize a transaction into its account categories. Once we have analyzed and classified, we know what the transaction is and what the accounts are that are affected by that transaction. The third step is to record it. And again, the basic traditional terminology would be to journalize in the journal, and then post or transfer the amounts from the journal into the ledger, or the general ledger. And that's the beginning part of the recordation process, and it goes on from there. After we have recorded transactions, then we begin the process of summarizing. And basically we go from doing a trial balance, making sure that our account balances are in balance, and we'll talk more about that as the semester goes on, and culminating in the preparation of our formal financial statements. Once we have our financial statements completed, the last step would be further analysis, this time of the finished product of the financial statements themselves, and interpretation of the results or of the data. And I think that's a good summarization of accounting as a process, and some of the key terms and steps that we need to get familiar with as we move forward in the material.